In today's Common Sense, Craig Bolanos, the CEO and founder of Wealth Management Group, is here to talk about excess savings. Craig, Americans during the pandemic had plenty of savings. People were locked down, so they weren't spending as much money. And for many people, government checks were coming in to help subsidize their living standard. What are your thoughts on the days of excess savings now starting to dwindle?
Well, Angela, you're right. This concept of excess savings has been a hot topic ever since the pandemic, and it behooves all of us as investors to understand this as we go through the latter part of the business cycle. The Federal Reserve defines this excess savings as basically the dollar amount of savings over and above where we were from pre-COVID. And at one point in time, the excess savings in this country topped 2.1 trillion. That's trillion with a T. But then all of the households that had received all this pandemic-era subsidy, well, everyone eventually got around to spending because people wanted to make up for lost time. I think lost time is YOLO, you only live once, or FOMO, the fear of missing out.
Well, times did quickly change after the lockdown. Money started flowing back into the economy in the form of pent-up demand. Should we, though, be concerned about American savings now going down?
But I want to point out something so sincere. There are so many households that have decent balance sheets in America, and a lot of those decent balance sheets have really been developed by the fact that people had mortgages, student loans, auto payments, various forms of fixed debt service. That's exactly that. It's fixed. And the interest rates are relatively low. And because people locked in these low interest rates to service its debt, that's allowing the American consumer, for at least those consumers, to be able to manage their household's budgets and still have some of that spending that otherwise would already be drying up. And I think there's just evidence. If I make it a bottom line, Angela, we look at earnings season, companies on the top line and the bottom line, they were good. We see evidence from Apple, from Amazon, that the consumer has definitively not dried up. I know there's a key takeaway that upper income consumers are doing very well, given the tailwinds that are there in portfolios, while the lower band of consumers is struggling still with the higher cost of food and energy. But at the end of the day, here's what we know. A lot has been made up of the excess savings dwindling post-COVID, but the reality is, with a decent jobs market, company earnings, and a consumer who's continuing to find ways to spend, if not spending a little bit more frugally, I think of the concern over excess savings is overblown, at least in the near term, relative to 401k investors. I'm Craig Bolanos, the CEO and founder of Wealth Management Group. We exist to help people get retired and stay retired. If you want to connect with us, you can. Go to our website, investwithwmg.com.
The time has come for us to say so long for now. We appreciate when you connect with us, though, on social media or businessfirstam.com.